Abhishek, thanks very much for that. So that is the WPI data for the month of Feb, which is largely in line with estimates. It has declined on a month-on-month basis. So that's the big headline. The WPI data for the month of Feb has come in at around 0.2%. The street was anticipating 0.2%, 0.22%, so it's largely in line. And it has come in versus 0.27% on a month-on-month basis. So yes, there is a softening which has taken place in terms of the WPI data. Separately, it is a 3-month low in terms of the headline data that has come through for WPI. Now, a couple of key points to monitor with regards to WPI this time is that the moderation is most likely expected to be because of the food inflation as well as muted core WPI. So we'll wait by for those details to come through. Remember that core WPI is probably expected to decline to a sub 2% figure versus around 1.23% decline that we saw in Jan of 2024. We're waiting by for Rupa Rege Nitsure. I think she's with us now, joining in to discuss the WPI data. She's an economist at L&T Finance. Rupa, hi, welcome to the show. So 0.22, some people were even expecting maybe a contraction to come through for WPI. It's coming at 0.2%. Your take?
Yeah, I was expecting it to be around 0.1% and Street was expecting it to be around 0.3% because we have seen, it is aided by favorable base effect, first of all. But other thing is that in the month of February, we had seen, significant easing of global minerals and metal prices. So cost pressures for the manufacturing sector have been easing. And that's why, the manufacturer product price index, there we are seeing maximum benefit of that. And that is the main trigger why WPI is decelerating.
What are your thoughts on how this will reflect in the next CPI? Even though, food inflation was rather sticky, we saw the CPI still maintained at around that 5% mark. Nothing really to worry out there. How does this reading plow into your future estimates of the CPI?
CPI, the core component of CPI is more closely linked to WPI because food and fuel, they have a lot of noise and they depend on many external factors like weather or global shocks, etc. So I personally feel that core inflation's downward trajectory will continue. Core CPI inflation's downward trajectory will continue thanks to the RBI's consistent stance of withdrawal of accommodation. And other thing is that globally also because of recessionary tendencies, metals, minerals and other commodity prices are subdued. So that is helping our manufacturing sector, which actually has started showing good signs of growth. So if imported inflation falls down, overall inflation will remain benign, except for the fact that India is vulnerable to recurrent food price shocks.
We have the core inflation as well. It's a negative 1.3% versus a negative 1% in Jan. That's the WPI core inflation. Ekta, you want to comment on that?
Yes, absolutely. It was expected to be in contraction mode. Just wanted to point out that food inflation has actually inched up on a month-on-month basis. So it's come in at around 4.09% versus 3.8%. There was some expectations that maybe there could be a softening which could take place in terms of the food inflation. But potatoes have come in at around 15.34%, onions at around 29.2%. Manufactured products minus 2.7%, which is in deflation territory, and fuel and power, which has extended its deflation to all the way to around 1.6%. So these are a couple of factors to keep in mind. Wanted your thoughts, Rupa, first on core, which is a decline of 1.3%, as well as food, which is now hardened to around 4.09.
Yeah, because we have seen with CPI data was released, we saw that major shock came from the vegetable prices because this year, because of the El Nino conditions, even temperatures are up by 2 percentage points across, 2 degrees centigrade across India. So that is impacting vegetable prices this year. So vegetable, fruits, eggs, etc. Those prices have risen. And within the food grains articles, I think there are not much issues now on wheat, etc. But pulses and rice, they are the problematic categories, and they will remain as the primary source of food inflation. So food inflation, because of uncertainty about the future trajectory of food inflation, Reserve Bank of India will stay cautious. But contraction in core WPI was expected, because if you look at the global commodity price movement, the pace at which commodity prices are easing is quite significant. So, cost push pressures for manufacturing sector will stay benign, and that's a positive factor for us.
So with all things, domestic and international, what is your prognosis the RBI will do going forward? Have you factored in any sort of rate cut this year? And if yes, by when?
See, the timing cannot be guessed by anybody, because RBI governor has been saying time and again that they would like to bring down inflation to 4% level on a durable basis, on a sustainable basis. And our inflation still is above 5%. And going forward also, this year, the second advance estimate of food grains production also has shown lesser production of food grains across for all major crops. So supply side issues will continue for food grain articles. Of course, they are saying that next year, there could be La Nina conditions and better monsoons and better food grain production. But at this stage, we cannot say much about it, because the SkyMet also has said that there is 50% probability that there will be better monsoon. So it's a wait and watch condition. So I'm not expecting Reserve Bank of India to prematurely start easing. And if you look at the growth inflation mix, when in the first 3 quarters of the current financial year, we had GDP growth of in excess of 8%. And when we are seeing such a strong capex push and infrastructure, capital goods sector doing construction activity doing so well, I don't see any pressure on Reserve Bank of India to prematurely ease the policy when inflation is sticky around 5% level.
Okay, just quickly, Rupa, before we let you go, April 3rd to 5th, the policy when the NPC meets, you expect a status quo in terms of rates as well as in terms of stance?
Yes, that's right. That is my expectation.
Okay. All right, Rupa. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Rupa Rege Nitsure talking about the WPI data. Remember, the WPI data has come in at around 0.2% versus our poll of around 0.22% and versus 0.27% in the previous month. The core WPI continues to be in deflation territory. We'll take a short break. On the other side, however, we'll focus back on the markets. We have Tridip Bhattacharya of Edelweiss AMC joining in with his view on the markets. Stay tuned.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.